The Bloomberg dollar spot index falling for 5 consecutive quarters, worst stretch since March 2008. What does the second quarter hold for the US dollar?
I think to answer your question succinctly, I would say 1 to 3 months, the dollar is going to be roughly flattish, in our view anyway. But I would point out as well that the natural energy for the dollar is still lower. You're not seeing at the moment the volatility in equity markets mimic an FX, though, and that's important. And I think it's because the FX market is waiting and watching. The FX investors are waiting to see what impact the equity market volatility does. Okay, does it spread to credit? And if it spreads to credit, do trade tensions at the same time start to cause global growth expectations to sour significantly? If that happens, it will change the dynamic for FX considerably.
Do you expect that to happen?
No, it's not our view now, but it's a reason why I think the EM trade it could suffer if it happens. Again, it's not our base case, but as an example, aggressive tariffs by the U.S. on China. Exports from China into the U.S. That could have knock-on effects on the whole of Southeast Asian supply chains. So these are big issues. And if EM assets start to sell off significantly, now you're cooking with gas. There's really only one place for that money to go. It will be back into the U.S. dollar, not because the dollar's external fundamentals will have improved, but it's simply because it's the numeraire for the global monetary system. So it's got to, you have to, the capital's got to go somewhere. So we're waiting and watching to see what happens. On top of that, the dollar also had a pretty bad Q1. Admittedly, most of the weakness was confined to the month of January, but it was down around 3 and a bit % for the quarter. That's a sizable move. And so what we're saying for April, for the time being, the dollar is going to be pretty flattish, but ultimately on a medium-term basis, we think it goes lower.